Hello, all Inderes TV viewers. Today I'm here with Analyst Antti Viljakainen to discuss Scanfil and their Q2 result. You can read the research at inderes.se. Hello, Antti, and welcome.
Oh, thank you.
So, can you summarize Scanfil's Q2 for us?
Scanfil's Q2 was excellent. The company grew some 14% on the reported level. But if we exclude spot sales that were generating sales but not margin, especially on the comparable period, Scanfil grew organically some 30%, which is exceptional figure for the company. The net sales landed to some 240 million, which is a quarterly record, and strong net sales and efficiency gains easing component situation brought Scanfil to 17 million euro EBIT, which is also a quarterly record. EBIT margin was slightly above Scanfil's target of 7%, so company improved significantly from the relatively weak comparable period. There were no surprises at the bottom of the profit and loss statement, and also cash flow improved.
Okay, so good overall. So energy and clean tech supported by the green transition acted as the growth driver, but especially advanced consumer applications showed softness. Is there any reason to be worried about the performance of other segments going forward?
I wouldn't say so. Energy and clean tech was of course a star performer in the quartile with some 40% growth, if I remember correctly. But also all the segments actually grew if we exclude the spot purchase effects from the sales.
Right.
So I would say that the growth was on quite broad basis in Q2, and the rest of the year looks also very promising in this sense.
Okay, good. So the CEO will change in September at the latest. How do you see this for the company? Is it a good thing, or is there anything to be worried about?
No, well, I wouldn't say that the investors should be worried about that. Even if the leaving CEO has done a magnificent job during his 10-year period. I think that the total shareholder return for this 10-year period is some 30% of year, which is excellent compared to any company on the international scale as well. So those boots are big for the new CEO, but of course nobody runs the company alone. Scanfil has a very strong board and long-term strategy, so I wouldn't expect that new CEO is going to change the company from up to down.
Yeah.
And also the new CEO comes from with very interesting background, so I think that he will have also some new ideas to give for the company.
Okay, sounds good and interesting. We'll see what will come. You stated that the company seems to be prioritizing lowering inventory levels. What are the risks if this fails and inventories remain higher for a long time?
Scanfil's inventories increased in 2020 and 2022 when component availability was a big issue in electronics industry. Higher inventories tie, of course, capital, which costs money nowadays, and high inventories also lead to some write-down risks if they stay on the elevated level a longer time. The company has improved relative net working capital efficiency in Q1 and Q2, so they are heading to the right direction. on the headline level, it doesn't become very visible because they are also growing strongly, which always tie some capital to inventories in this kind of business. But I wouldn't be very worried about these inventory levels as they are decreasing currently compared to net sales level.
And what are the expectations for the company for H2 and a few years going forward?
Scanfil gave a positive profit warning in July, in which they increased net sales guidance brackets and also EBIT guidance brackets. I think that they should have quite good visibility the demand and volumes for the second half of the year, and it looks really promising. They are delivering now products for the customers that got a very good order inflows last year. So H2 should be excellent for Scanfil. But going to next years and to 2024, I think that their visibility also decreases. It's typical for this kind of company. And the recent data from European macroeconomics, from especially from industry, has been relatively weak. And some Scanfil's customers have also reported lower order intake in their Q2 reports. So I'm a bit cautious about the profit growth for the next few years. They also take the bar is higher, significantly higher, as they make excellent results this year. So I assume that and forecast that profit growth will moderate significantly going forward from this year.
Yeah. So an excellent 2023, but then probably not as strong.
Yeah, not. But this risk related to macroeconomics and industrial demand is of course two-sided. If economic conditions improve and green transition continues fast, they have definitely an opportunity to beat my current estimates.
Sure. Yeah. And one final question: the valuation of the share. What does it look like right now?
I think that it looks like quite fair nowadays. The Scanfil is trading somewhere around its 5-year median multiples, around P14, EV/EBIT 11. They have improved a lot during the last few years, but on the other hand, the interest rate level is higher currently. So I think that these multiples are quite fair for the company. Scanfil is trading deservedly, in my opinion, on the premium compared to peer group, and also my DCF valuation suggests that there is no significant upside or downside potential in the share.
Yeah. So a pretty decent valuation that is.
Yeah, in the short run, of course, Scanfil has a very compelling investment story for the long run. The strong track record. So I wouldn't rush to sell all the shares if you are a long-term investors. But for the new investments, I see expected return to be close to return requirement.
Okay. Thank you very much. And the link to the report is below. Go read it.